Alright, I'm back on YouTube. And awesome, I'm on Facebook. See, I'm getting better at doing this quickly. Let me make sure. I don't think I have the same audio issue as before because my settings did roll over from the previous broadcast. So welcome back, everybody. Today is August 21st, and it is a Friday. Happy Friday. And today I am playing the Cash Flow Classic game that's available to everybody for free. This is one of the best tools that I know of that is absolutely free, once again. That is the best summary of how you can illustrate your financial journey from being stuck in a 9-to-5 rat race all the way to getting out of the rat race and on your road to financial freedom. This was originally a board game that Robert Kiyosaki would if you're not familiar with Robert Kiyosaki, he is the author of Rich Dad, Poor Dad, and he developed this game originally as a board game in I think like the late 90s or something like that, as a tool to help people achieve financial freedom and understand how it's done. So I'm just going to go ahead and hit the play now button and going to zoom in just a little bit. Okay. And we are going to get the show on the road and play this game and achieve financial freedom. And obviously this is a video game. It's not even a board game anymore. It's a video game now. It's online, and it's simplifying a lot of things for you. But the major milestones and principles, I think, are very, very similar to real life situations. Some of the things are actually kind of funny. So let's get started. Let's get the show on the road. Click anywhere to continue. We'll create a new room. By the way, if you want, you can play this game with me, and I do this every Friday after the markets close and after I do my trading vlog. So we can, if you want to sign on next week and you want to play interactively and while we're chatting, that's totally fine, and I invite anyone and everyone that wants to do that. But for now, for the time being, it is easier and faster if I play by myself and I just walk you through it. So that is what I'm gonna do now. And so my dream, let's pick a dream. This is how the game works. Is you have to pick like what is like the dream thing that you want to achieve and like that you're gonna work for. And I don't necessarily agree with this piece of the game. But that's how the game was designed. It wants you to have a big milestone to shoot for. So let's see. I want to golf around the world. I actually said this in real life. Like I like to play golf, and I'd love to golf around the world. So let's say I'm gonna pick this one. Okay. Now choosing that dream also comes with it a career. I'm an airline pilot. I make $9,500 a month. That's a decent salary right there. And I have all of these expenses. You can take a minute or even pause the video if you're watching a recording of this. You can pause the video and check out the expenses that I have in this hypothetical situation. And I make $9,500, but I am spending $6,900 in taxes, mortgage, car payments, so on and so forth. And my payday, the take-home cash, is $2,600. You can also look at this as this is how much I can potentially save $2,600 a month. Now this is better than average. This is a higher than average scenario. So maybe next time I do this, I'll pick a more average kind of scenario just so it doesn't feel as much of a disconnect. But this is your typical situation. So I'm gonna roll the dice, and I'm gonna right away land on. In case you're not familiar with how the game works, this little helicopter icon is me, and I landed on this little tile here. And so in the beginning, so long as I have a job, you're just going to circle around and around this little middle circle here. That's the rat race, right? You're spinning and spinning and spinning and spinning, and you don't really have any end in sight unless you know how to get out of it. That's how you get out of the rat race. So I am going to I'm not able to donate 10% of my money to charity right now, so I'm going to continue to roll very quickly until I find something that is noteworthy to talk about. And the first thing that I come up across is I have a potential deal opportunity. And I can do a small deal for 5,000 or less, or a big deal for 6,000 or more. Obviously, I'm going to aim for the small deal right now, given the amount of cash I have. And right now, we just talked about the stock market a few minutes ago. I have the opportunity to buy ON2U, On2U Entertainment for $10 a share. $10 a share is actually on the low end of this trading range, so it's actually pretty good. Now, obviously, in real life, you're not really going to know what the trading range is. And actually, no, I take that back. In real life, if you are looking at a buying opportunity post-COVID, you can definitely consider a lot of prices of stocks that are still actually at a really, really low price. A lot of different stocks are still near their lows. So I'm gonna buy a little bit of it. I'm gonna buy 100 shares of $1,000 worth of this stock, and I'm looking to get out of it at somewhere around near 30. If I can double my money, great. If I can triple my money, even better. Any more than that is like no brainer, right? And this is a very, very important piece of that I should be talking about right now. Most people, and I just, I'm part of several Facebook groups where I say, like, should I buy this stock, right? And this is a very good, easy way of summarizing the answer to that question. Is it a good price to buy it at right now, right? Or are you letting a little bit of FOMO dictate your decision making? Are you looking at, do you know what the high of the price or what the high range of the stock is? Or are you looking for it to make all-time highs, right? One is riskier than the other. I'll let you try and figure that out, right? If you know what the high is already, there's precedent. So a lot of people just ask like, hey, I'm looking for, should I buy Tesla right now? Because Tesla is on a tear. Should I buy Apple right now? It just did a split. I should buy it, right? That's a novice way of thinking. Professionals don't think that way, right? Professionals actually look at the data that you just saw. They know what the range is. All right. So moving on, and I have an offer to buy an apartment, but I don't own an apartment. So moving on. Hey, look at that! I had a new baby. So my expenses go up. I have to pay $480 to have a baby. I have an offer to buy a multiplex. I don't own one. Another deal opportunity. Let's check this out. Okay. Now, I can buy a condo for sale. I can do a down payment of $5,000, which is a little bit outside of what I have right now. If you didn't notice, I actually passed one of the yellow tiles, which is a payday, right? So even though I have more expenses now with more children, I actually have more cash in my pocket. Now I can actually notice that 4,000 is less than 5,000. If I want to buy this asset, I'm going to need to borrow money for the down payment, right? And use up all my existing cash. So is that worth it? Let's find out. This is how you do that calculation. It says I need to take a loan out of $1,000, and my monthly payment on that loan is going to be $100. My monthly cash flow of the asset, it was $220, if you recall. So even with this loan payment, I will be cash flowing. That is a good buy to me. So I'm going to say yes. And another useful calculation here, I'm going to whip out the calculator here on Windows. And another useful calculation that is noteworthy is you take the monthly income, or rather the monthly cash flow. That's how much money you're putting in your pocket, right? You have to do some work to even get that number. But you do that and you divide it by the down payment, and I'm making 4% on my money profit. um, every month, 4.4% to be exact, right? So that is actually a pretty decent rate. In real life, that would be a no-brainer. That would be a buy, 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 right? Okay, so I'm going to buy that and watch what happens. My payday actually goes up despite the fact that I took out a loan. It actually goes up by $120. Okay? All right, so I'm going to roll, and you can see my rat race bar, my meter, right? My goal is to get this all the way up to, max out, and that's when I'm able to actually exit the rat race. Now, that's not going to happen. I'm just a tiny bit closer to that happening now that I have an asset that cash flows $220. Okay? Now, I have another opportunity for a deal. I'm going to take it. I can buy land for $5,000. I don't have $5,000. I should not be borrowing money for something that doesn't cash flow at all, because that's just going to make me have to pay down a loan. This is a hard pass. Follow that logic? I went quick, but it should make sense, and I'll have plenty of more examples to show for it. Right? We just got to roll through these turns. Okay, if I donate $972 to charity, this is the karma effect. I can roll 2 dice from now on, and I can progress faster, which means I can start getting my paydays faster. So I will donate that, even though that's like a third of what I had, maybe a little bit more. Now I can roll 2 dice. I rolled exactly on the payday account, so I just got paid. So that's fine. And we'll roll 2 dice again. Another opportunity for a deal. Small deal. Now I could pay $5,000 and another two bedroom, 1 bath condo. But the cash flow isn't nearly as good as the last one. Let's check it out. 160 divided by 5,000 is only 3%. But I don't have to borrow any money for it. So in a way, it's going to cash flow better than my previous deal. That only cash flowed 220 minus my loan payment, which is 100. So 220 minus 100 is 120. So you can see here, this asset, the cash flow is being offset by this loan payment. So this one's pretty decent. I'm going to take it. Not as good as the previous one, but I am going to take it. Notice that you got to save money to be able to do this, right? So if you're in a situation where you're not saving 2,000 some odd dollars a month, well, that's kind of the first place you need to you need to address. That's the first piece of the puzzle. You need money to invest, unless you're doing fancy moves where you're using other people's money. And like that just makes it, that's just more advanced of a technique that this game doesn't actually go into outside of taking out a loan from the bank. Okay, we're rolling 2 dice. Hey, it's asking, you want to donate again? Sure, I want to roll 2 dice. I'm gonna donate another $1,000 or so. Rolling 2 dice. Another deal opportunity. I have a small deal, and this is only 2%, right? I'm doing my math correct if I'm doing this. I'm doing this right. 100 divided by 5,000 is, whoops, that's minus. 100 divided by 5,000 is 2%. Not great, honestly. And I'm going to say pass because I can't do it, out of my own pocket. So pass on this. The return wasn't that great anyway. Rolling 2 dice one more time. Someone wants to buy a 3-2. I don't have a 3-2. Rolling dice again. Oh, I hate when this happens. So I'm downsized. I have to pay $7,400, which I don't even... Do I even have? And I have to lose 2 turns. So I don't even have that much money. So I have to take out another loan to pay off my debt for being downsized. So I'm going to do that. No choice. Lose 2 turns. Sucks. And I guess I needed to make myself feel better because I needed to make myself feel better because I am buying a new fishing rod. So I'm gonna take another small deal here. Let's see what I can do. Okay, so this is the opposite. This is right here. I have an opportunity to buy OK For You drug company. It's a stock, and it's gonna cost me $40 when the trading range is 5 to 40. Now this is over. This is paying max price for a stock, which is what a lot of people are doing right now, right? With Tesla and with a lot of tech stocks that are hitting all-time highs, and a lot of people are doing that right now. And this is something that is not a smart move. But at this price, like, a lot of people are buying gold because it hit all-time high prices, and watch. Then what happened? The gold fell down, right? Gold fell off of its all-time highs, and now it's kind of ranging. That's what's more likely to happen if you're buying. The corrections and drops in price tend to come after you hit all-time highs. It's just a matter of when. So I'm generalizing, of course, but I'm just illustrating. It's usually a much better idea to wait for a better price. So I'm gonna pass on that. Take a small deal opportunity. Same thing. Mutual fund, expensive. It's on the high end. I would never buy a mutual fund anyway. I went to a concert. Hope I had fun. And small deal opportunity. Now we're talking. This is another real estate. You're gonna notice that this game is very, very biased towards real estate, and you can probably guess why. This is a marketing tool for Robert Kiyosaki, who wants to sell real estate courses. So of course, his free game is going to make it seem like the best assets are real estate, right? And the way that he handles stocks, for example, are not so great because he doesn't have as much money, or he doesn't have as much of an asset, an education platform for trading stocks. So the way the stocks are designed to show up in this game are really weird and kind of oversimplified and not really accurate. And it's like real estate is where it's at. The game is kind of subliminally sending that message to you. Anyway, this is a 3.5% cash flow monthly, which is great. I can afford it. Buy. Okay, I'm creeping up slowly but surely. I am making progress in my financial freedom bar. Okay, now we're talking, right? Now we have a stock that is near the bottom of the range, and so I'm gonna buy, let's say $200 worth of this, which is $1,000 worth of stock, and roll the dice. Small deal. Now I can sell it for the same price. What's the point of that? I am gonna show. I'm just for the sake of showing you. I'm gonna sell half my half of what I have just to break even, just so that I can show you that, like, how that works, right? So I have 200 shares of my Tea For You, right? And I'm gonna sell half of it, and when that happens, I have 100 shares left. Okay, I made no money there. I just sold for the same price that I bought it at. Okay, just as an example. In real life, I probably wouldn't do that. Okay, certificate of deposit. Now, understand that this cash flow is pretty terrible compared to everything else. This is monthly, 0.05%, a 0.5% monthly. But if you multiply this by 12, that's your 6% certificate deposit yearly. And that's actually pretty good for a certificate of deposit. But the percentage is too low. If I'm in the rat race and I'm looking to achieve financial freedom, this is too weak of an asset. The rate of return is too slow. It might be great if you have $1 million to spare and you're like, I don't know what to do with it. I just want something guaranteed. It's going to keep up with inflation or whatever. Then this makes sense. But as a 9-to-5er, it does not make sense. Whoops. And then I click buy by mistake. Whoops. Okay, so I'm going to click pass on that. Roll. Small deal. I can. This is funny. My sister-in-law is downsized, needs $5,000 to make house payments. She promises to pay you back $10,000 after she finds a new job. No, thank you. Um, it's a sister-in-law. This is not the kind of investment. This is not investing. Um, you might have a soft spot in your heart for someone like this, and in real life, you might do this because you might have a really good relationship with your sister-in-law. This goes beyond money, but that's not what we're here to talk about today. I'm not here to talk about, should you lend your in-laws money. I'm here to show you the path to financial freedom. And if I'm looking at it from pure numbers perspective and a business perspective, it might seem heartless, but I'm gonna pass on this. And what do you know? That's probably a good thing because I just had another baby. All right, I can use that as my excuse. If my sister-in-law ever asks me, why didn't you lend me money? It's because I had another baby. That's why. Okay, so I have another small deal opportunity to pick up a $3,000 down payment on a $50,000 house. That's going to cash flow $100. Let's do our math here. And again, this is something you should be doing for every real estate asset in real life that you come across. Does it cash flow, and at what rate does it cash flow? Assuming that you actually even get this, right? This is assuming that you're getting like everything goes right. All the human capital and all the variables that might ruin this in terms of dealing with other people. All of that is not a factor, and it's just going to guaranteed cash flow. Like everything is going perfectly, and when it does, I'm cash flowing 3.33% per month. Sure, I'll buy it. But right now you notice I'm buying all these small assets, and like in real life, I am now a landlord of 4 houses, right? And I'm not really anywhere closer to financial freedom, but I have a lot of liability here. Right, I have a lot of liability and risk about bad tenants. What if my house burns down and whatnot? So in real life, this is not as much as I know Robert Kiyosaki wants you to be like, hey, you just keep buying houses, right? Buy an asset. Real estate is the best asset. There at this point, you have to start looking at incorporating yourself and whatnot. And it's not just you shouldn't be having all these assets in your name. But this game doesn't actually cover those types of aspects of real life. So I'm gonna roll. Moving on, rolling the dice, and I want a small deal again. And I can actually buy a mutual fund at the lower end. But I'm not gonna. Mutual funds are trash. Big deals. Okay, so let's take a shot at a big deal. I'm probably a little bit too cash poor to be able to do it, but let's see. Yeah, so you got to down pay $75,000 for an apartment building. Can't do it. Okay, rolling the dice. I want a small deal. I can buy OK for you, drug company. No, thank you. It's too high of a price. Small deal. Hey, OK for you, split 2 for 1. Maybe I should have bought it. I don't know. Okay, small deal. You'll notice like this is how things go. It's like it's very much of a grind, and that's how it is in real life as well. Negative cash flow property for a 2-bedroom 1-bath. There's really no reason to do this. Why would you want something that negative cash flows at this level? On a higher commercial level, when you're dealing with multi-million dollar assets, then absolutely go for it. All right, so now I have a deal that is $4,000, and it's going to, I believe this is 2%. 200 divided by 4,000. I'm gonna 4,000. 5%. This is the best one so far, right? No questions asked. I had the money to do it. I'm buying that asset. So now let's take a look at. Let's just take a quick look. I have 5 real estate properties right now. 3 condos, 2 houses. It's starting, but I'm not that close to getting out of the rat race. Okay, so I just want you to let you know that you can have all this stuff, and this is like what's not illustrated in this game is how much mental brain stress that it takes to actually manage this many. So do you have it in your budget? So I'm talking real life right now. Do you have it in your budget and enough margin in your cash flow to hire a property manager? If you don't, then that's definitely a place you got to start looking. I'm also gonna address the debt component in a few minutes, but I'm just gonna move this along here. Mutual fund, no thank you. And now I'm gonna repay some debt, right? Just to show you what we can do. Remember, I took out $2,000 worth of loans in order to pay off. So I got downsized that one time, and another one was to buy the asset. Now I have enough here where I'm paying $200. I'm paying 10% of this $2,000 loan per month, right? That's a lot, right? So I don't want to continue to do that. Compare that with the retail payment on my credit card is $50 divided by $1,000 is only 5%, right? That is I'm more okay with paying the 5% than I am with paying 10% loan payments, right? 10%, that's with interest and all that stuff. Okay, so I'm going to pay down while I have the cash to do it. I want to get rid of this loan, and I'm going to pay the full amount, $2,000. Okay, so now you'll notice that my cash flow actually went up because my loan payments are gone. That's just how it works in real life, right? So be mindful of where you're paying a high rate in your like your credit card payments or your installment loans or whatever. Understand what rate you're paying. Okay, I went to an air show. That sounds wonderful. Keep rolling. I'm gonna pick up the pace a little bit here. Buying a stock, no thanks. It really wants me to buy that stock, huh? Reverse split, 1 for 2. That's not good. I don't think I had that though. Did I have that? No, I did not. Split 2 for 1 on a my T for you. Great. That's actually great, right? It's like what happened with Apple. All right, another small deal. Found a great deal. Down payment 200. Wow, this is a really great deal. It actually tells you it's a great deal. In real life, you're gonna have to figure that out. Every deal is gonna be called a great deal when you start to play this game. Let's look at this. 250 divided by 2,000. That's over 10%. That's 12.5% per month that you're cash flowing. This is a no-brainer. Like I would buy, like I have $12,000. If I had more, I would buy 6 of these if I could, right? And that's the thing with real estate. You might find one of these great deals, but how well does it scale? Because the stock market, for example, has a ton more liquidity and volume for you to buy. Let's say you found something as great as this, you could buy 100 shares, 1,000 shares without really breaking a sweat. It's when you get into the billions of dollars worth of stock, that's when you actually start to run into volume and liquidity problems. But in real estate, every asset, it's kind of like every asset for themselves, mostly, especially in residential. Okay, I don't have any land. Someone wants to buy land. I don't have any land. Just rolling through the dice here. Okay, so I'm gonna take another shot at a big deal. Let's see if I come across something. 8plex for sale. Not able to do it. You're gonna find that your financial freedom is gonna come from the big deals. Okay, I'm gonna take another shot at a big deal. $15,000 to cash flow 500. Okay, let's do the analysis on that. What's the percentage for $500 divided by 15,000? 3.33%. Not only is it 3.33%, which is okay, not bad, for the game anyway, I'm also going to cash flow 500. I need to borrow approximately 3,000 to even afford this, which means after the loan payment, I am only going to cash flow 200. And it's going to cost me all my cash. I'm going to wait for a better deal, a better rate. Okay. Okay, look at that. Like this. Someone wants to buy me out. Someone wants to pay me $45,000 for every 2-1 condo that I have. Now, you have to select which. I have 3 2-1 condos, right? I have to select which one I want. Now, if I attempt to sell this one, I am actually going to be losing $5,000 because they're offering 45. This one cost me 55 minus the mortgage, right? The down payment, right? So it's like, why would I do that? I am, however, going to offload the $45,000 and make a $5,000 profit off this one. Do I not? I guess I didn't have a mortgage on this. I'm not understanding this. Hold on a sec. Let's go back. Let's sell this one. 45,000 is my offer, minus 36. Oh, 36,000, which is the 45 comes from the mortgage and the 36. Okay, so I'm gonna sell this. I'm gonna make 9,000. You see that? I'm gonna sell the other one. I'm gonna make 9,000. Okay. Because the mortgage is different now. I have a little bit more equity built in. So I'm going to sell that, but I'm not going to sell the one that cost me $55,000. So now I have $34,000 to play with, and now that means I can go out to dinner, but that also means I can actually go for a big deal, like this right here. I can use all my cash to pay down to put a down payment on a fourplex. That's going to cash flow $2,000. Now let's same math as before. What is $2,000 divided by the monthly the down payment? I'm gonna cash flow 6.25%, which is great. It's not as great as a 12%, but it's still better than the other ones that I had for a bigger and for more money, right? So I'm gonna buy this. I don't need to borrow any money, and look how quickly my meter jumps from that one business, or rather, it's a multiplex actually. Right? It's a multiplex. Yeah. Okay. Another deal opportunity. I probably need to go small until I can save up some money. Oh, look at that! It's good. They're offering to sell. They're offering to buy at a bigger price. So I can sell all 200 of my shares. Remember that I used to have just 100 shares, and then it's split, which is why I got 200 shares. Basically. They halved the value of their stock, so I actually ended up with double the amount for this. Even though for the same amount of money, they're willing to overpay me for each one. So I'm going to make $4,000 here, right? That's easy, no brainer. I have 10 grand. I'm just rolling through, just living life. Someone wants to buy a limited partnership. I don't have that. Aha. Now somebody wants to buy my multiplex, which is $30,000 per unit for all units in any combination, 4-plex, 8-plex, whatever. So what is mine? Mine is a 4-plex, and they want to pay me $30,000, a total of $108,000. Or rather, $120,000 minus the 108 is I'm gonna make 12 grand on this. I am actually going to pass on this because that just brings me back to square one. I don't need to go backwards or do all this paperwork. I'm imagining this in real life where I would have to, do all this paperwork just to go back to having, $30,000, but not actually having the cash flow, not actually being anywhere closer to my financial freedom day. So I'm gonna go back. I'm not gonna sell it, but it was a good review. Okay, I'm gonna go for another big deal here. All right, so this one, a $50,000 down payment for an $800 cash flow for a small shopping mall. 1%, 1.6% cash flow. Not very good. Pass. Gonna go for another big deal. Okay, $9,000 down payment for $300 is what I believe is a 3%, right? Not terrible, right? Only less than half my cash. Pretty easy decision to buy it. It doesn't make that big of a difference, but hey, this is just for practice. This is just for education purposes. Go for another big deal. This one is probably a little bit better of a deal. 320 divided by 8,000 is 4% exactly. So I'll buy this. This is just like a slow and steady grind kind of a pace. If you watch me do this, earlier this week on Monday, you will have noticed that I went near bankruptcy, right? It was high drama, and that's very real, like a real life thing that people are dealing with as well. So this one is just like I'm just grinding. This is a common experience as well. So I have a $300 payment, cash flow, that for a $6,000 down payment. I believe that's what, 5%. Pretty good. Buy. Right? I'm just collecting houses right now. I'm just grinding slowly and surely. Right? Hope you can follow that. Right? I'm gonna pick up the pace a little bit now, because I think you're seeing a lot of the same thing over and over. Cash flow negative. Nope. Deal opportunity small. Okay. Nope. Mutual fund again. Nope. Wants to make me overpay. Nope. Reverse split. That doesn't even apply to me. My daughter had a wedding. Certificate of deposit. No, thank you. All right. Well, this is terrible. It wants to buy my stock for half of what I bought it for, right? I bought it at 10. It wants to buy it for 5. So no thanks. Bought a new speaker. Deal. Trade war panic leads to record low share price for this home electronics seller. It's one. So just a few minutes ago, it was trying to get me to sell at 10. Now it's now I can buy it at 1. Yes, please. I'm gonna go a little heavier on this. So I'm gonna buy $2,000 worth of it. I guess that's to simulate the fact that movie theaters crashed. Okay, I'm gonna start to pick up the pace here a little bit because I'm grinding and I'm not really gonna get to my goal at this rate of being financially free in less than an hour. Okay, big deal. Come on, give me a big money. Okay, 600. I'm gonna take this. Another fourplex. Right, you can see that I jumped up a little. Okay, let's see if there's anything I can do with my $13,000 that's going to take care of any kind of credit card payment. Let's see. My credit card payment is $660 divided by, whoops, 3%, not too bad. Okay. Let's go for a big deal. Limited partner, I can't afford this. Whoops. Pass. Gave $10 to a friend. My anniversary, $200. That's a cheap anniversary if you ask me. Okay, now we're talking. I am offered $100,000 for a 3-2 rental house. Buyer has their own financing, which is always good. If you sell, you pay off. Okay, so I can double my money on, or even more than double on each of these houses, basically, right? So I'm going to sell the $45,000 one. I have some equity built into it, so I'm making a little more than $55,000. Sell that, right? It's like the real estate market boomed, and I'm going to be able to make back a bunch of, like double my money basically. I'm gonna sell this as well, and you can see that I'm gaining so much cash, but I'm not taking too much of a hit cash flow wise. And the 3-2, I'll keep that one. I have enough cash. I don't really need any more. Now I'm really looking for the big deal. And you can see I maxed out on kids. I guess I had a vasectomy. I don't have any can't have any more kids. This is interesting. Your brother-in-law lost his job and he wants to buy your 3-2 house. He promises to pay you, what is this, like a lease option? $100,000 4 years from now, but has no income or savings. He can pay you a small monthly amount, no now payment. If you sell at his terms, your cash flow goes down by $500 a month until I collect the $100,000. Now, this is like, do you want to do this? Do you want to take the hit for your brother-in-law is the question. The business decision is no. So I'm going to hit done. I am going to repay some stuff now because I have some things that I can get rid of. Some people might look at this as an opportunity to pay down my entire house so the house that I live in is now owned free and clear. So let's see what happens if you do that. When I gain $1,330 of cash flow a month because this number is going to go down. So it's that you can look at it as like a cash flow equation for 43,000. That's not even 1%. You know, that's a really good payment. Let's see, my car loan we established was like, what was it? 300 divided by 15,000, 2%. Credit cards, 660,000 divided by 2. Whoops. This is going to be 22,000, which is going to be 3%. I'm going to get rid of my credit card debt. And now that increases my cash flow slightly. But I have the cash to spare, so that's why I did that. Okay, moving on. Give me a big deal. I'm going to pay $8,000 for cash flow. Sure, no problem. See, I'm just going to move. I make decisions faster. I have $20,000 for $800 cash flow. Look at my, I mean, like, it's not a big deal. Like, I mean, it's not a big percentage, but I have the money to spare. Donate, sure, why not? I want to roll faster, right? I'm just really picking up the pace. Like, you can really start accelerating. $30,000 for a $1,500 cash, yes, right? Is it positive cash flow? Yes, sure, no problem. Somebody wants to, oh wow, my 8plex got flooded. with a broken sewer line. Fortunately, I don't have an Aplex. Okay. That's like a card that you would run across if, like, a life tragedy kind of happens, right? That's what that's about. So I'm just like, I just have the money to be able to afford these assets where I'm buying an automated business, coin operated laundromat that's going to cash flow $1,800 a month if I down pay $2,500. Sure, right? And boom, $25,000. That was $25,000 investment, and right there, I'm already out of the rat race. Now, for whatever reason, this is where the game starts to lose me a little bit, and it says receive 100 times your passive income, purchase your dream or increase your cash flow day income by $50,000. So I have to either make $50,000 a month or buy my dream, which was golfing around the world, I believe. I don't know how to look up my dream, but I believe that's what it was. So now you can see my icon is on the outside track. So I'm gonna roll I have $808,000 in cash, and I can buy this $300,000 asset that's gonna cash flow $9,500 a month. Sure, why not? I'm already like basically 1/5 of the way there. I landed on somebody else's dream, so this is another player's dream. The cost of their dream is just doubled. So this is where, like, I don't really understand. Like, I get the game is like designed to promote competition, and you have to be the first one out of the rat race. But at the same time, I don't like the idea of ruining someone else's dream in order to get ahead. So, but that's the way the game is designed. So I ruined someone else's dream, double the price, rolling the dice here, ruin someone else's dream, next, ruin someone else's dream, next, possible return. Okay, so if I buy 250,000 shares at 10 cents a share, and I roll a 6, so I have 1 in 6 chance, I can actually like 20x my money, right? 1 in 6 chance to 20x your money? Sure, why not? Didn't work. Alright, so my cash flow for this is $7,000. Buying a pizza franchise? Sure. Buy a dry cleaner? Sure, why not? Family restaurant? $14,000. This is a great one. Look how much closer I am. So this is just this financial freedom journey has been a relatively smooth ride. It's just a little bit tedious, but there's no real surprises, and this is how it is for some people. For other people, there is a lot more drama involved because of life happens, the assets you come across are just you have a bad luck with it. Yeah, sometimes you just have bad luck. So I'm going to buy that. And I believe this will do the trick. I'm going to spend, I have $3 million. I didn't once come across a tile that says lose all your money or you get audited, or like nothing bad really happened to me this game. It's just like been a really smooth ride. So I rolled a 2, so I don't get any cash flow. Okay, sucks. Cash flow for this, $300,000 for a cash flow of $10,000. Sure, why not? And one more business ought to do it. Cash flow, if I roll 4 or higher on a die, so it's 50-50 chance for me to get a cash flow here, and I roll a 3, of course, and I don't get that at all. Okay, this ought to do it. Cash flow of $8,000, cost me $200,000, and I've won the game. Right, so it's just it makes, so one of the things that one thing that I don't like about this game is that it makes it seem like once you have millions of dollars, life is easy. It's not easy. It's just that you're able to use you're able to make decisions at this level in a more with more abundance and with more room for error. because you have money to cushion yourself. But what it doesn't talk about is all the other problems that come with it. What this game doesn't show at all is things like, it does do it later on, but things like structuring entities, like what happens if you get sued, right? And protecting yourself. What happens if you how do you deal with bad tenants? Like, what happens if you actually lose cash flow? What happens to some of these businesses if they actually go under, right? What are the industry changes? What about if something like COVID happens? How are you going to handle your restaurants and your dry cleaners and all these other retail spaces? Like, this is a very simplistic game. But the decision making is where I'm playing this every week for a reason, because it does do a good job of revealing the types of decisions that need to be made for you to have a successful financial journey from wherever you're at now, whether you have a job or whether you're self-employed, you got your own side hustle going, doesn't matter. Wherever you're at now, if you want to get to the point where you're living off your investments and you are, in my case, playing golf around the world, then you need to make certain decisions and say yes to certain things and say no to other things. You can't just say yes to everything. And I think that's the kind of environment that right now is very, very highly encouraged. Just say yes to everything. And that it actually accentuates and it actually deepens the level of FOMO on a subconscious level, and we want to just say yes to everything, and then easily we get overwhelmed. So easily are we overwhelmed these days, especially with the amount of distractions that we have in this stuff. This is my phone, right? I have a Superman themed iPhone. It's so easy to get distracted, right? This is also a source of income, but it's also a source of distraction, right? It really depends. And this game doesn't really get into the intricacies of how that works, but it does generalize and simplify and show you the milestones that you want to hit in terms of the decisions that you need to make. Particularly in real estate investing. That's really where the game focuses, but the principles, the numbers, the cash flow, the money that you're bringing in on a monthly basis, that all stays the same no matter what kind of asset you're looking at. And if you want to see other content about those types of assets, just click subscribe to the YouTube channel, and you'll get more weekly content just like this. I do go live daily on my day trading vlog. That is my version of a side hustle. And I also go live weekly every Friday to play this game for you guys, just to have some fun and wrap up the week with a little bit of a positive note here, and have a little fun with it as we head over into the weekend. So for now, I'm going to sign off and say have a great weekend. Stay tuned for the next video from YouTube. Thanks, everyone.